Up next, we will have Mr. Anthony Rousseau from TradeStation Crypto. He is back with us today, and he is joined by Patrick Corker, the Vice President of Circle. How are you, gentlemen?
Doing well. Thank you very much for having me.
Awesome. Glad to hear it.
Hey, Haley.
Hi, Anthony. We are so glad you guys are here with us today. Thank you so much for spending some time with us on this Sunday. And I will turn it over to you guys. Thank you.
Awesome. Hello, Patrick.
Anthony, good to talk to you again, man. Great to be here.
Awesome. Welcome. Hey, is there any chance you could put I think you got your video. Are you able to get on video?
I'm having some technical difficulties with my personal laptop, which I'm on right now. So I will keep trying. Hopefully that kicks in.
Oh, okay, no worries. Don't want to get distracted by the video. But hey, well, thank you very much for taking the time today, Patrick. We are very excited to have you here to take a deep dive into stablecoins, USDC, the impacts on the financial system and crypto markets. Listen, you have such deep experience in this area, so we're excited to dive deep with you. But before we get kicked off, do you think you could take a few minutes and just share with the audience a little bit about yourself, your journey at Circle, and who Circle is?
Absolutely. So Circle is an infrastructure services company well placed in the crypto space to serve a very key function. At the simplest level, Circle turns fiat into digital dollars, most notably USDC. I've been at Circle for about 3 years. I joined Circle to rebuild the treasury team, which is very strategic to everything that Circle does, being that bridge between fiat and crypto. Over time, we built a number of product services on top of that key functionality, being that bridge, which include things like APIs that allow businesses, including, quite frankly, probably many of the constituents on the call today, who are in the trading space, who need API high velocity functionality to turn dollars into USDC and vice versa to participate more broadly in the crypto markets. And so we work right now with the largest institutional names in the crypto space who are high velocity traders, algo guys, prop funds, hedge funds who are using USDC as a primary tool in their portfolio. In addition to my treasury responsibilities, I run corporate development and finance and strategy. It's been a great ride at Circle. I'm really proud of everything we built. We've announced that we're doing two things simultaneously, becoming a public company in the next several months and also becoming a bank. So my days are pretty full, as you might imagine. But it's been great. I'm very excited to talk about USDC today to a lot of folks that may not have heard about USDC before, know a lot about USDC and what Circle does. That's where I spend a lot of my time.
That's excellent. And we are excited to deep dive into more about USDC and its growth that it's had. It's been astronomical over the past 3 years. I believe it was 2018 when it launched. And I think today, what does it sit at a market cap of over
Just
30
over
billion?
33. Yeah, we clipped 33 billion in the last 24 hours. So it's growing right now at about a billion a week.
That is just absolutely stunning. I remember when it was $500 million and you guys are just getting kicked off, and it's exciting to see how much it has grown and how important it actually has become in the crypto space. But before we deep dive into USDC, can we step back a little bit, Patrick, and just chat a little bit about stable coins and understanding what stable coins are, maybe the various ones that exist, and how people are using these stable coins today?
Absolutely. So stablecoins are a very common pair in crypto markets. And if you think about your larger exchanges like Binance or Crypto.com or Coinbase, Bitstamp, it will be listed as a pair with generally the more common, more liquid coins like Bitcoin and Ethereum and Solana, et cetera. And so people who want to trade in those markets and move value across exchanges, rebalance for different types of opportunities, will do so through USDC because you can do so seamlessly, instantly, effectively with next to zero cost other than gas fees. We don't charge anything for that service. So you can sort of seamlessly convert between really any one of 80 different prevailing currencies and USDC 24/7, 365 if you have bank accounts at either Signature or Silvergate. And traders find that extremely useful. And I think many on this call will have some sense of the fact that crypto is a 24/7, 365 market. It never stops. And so to be able to fungibly move between your traditional bank balances and crypto has proven to be a great tool for the institutional trading community.
Yeah, I would agree 1,000% with everything you just said. It's amazing to see how we've transformed the way that we were able to move value, and then the ability to actually tie this crypto asset to a either commodity or currency, and in this sense with USDC tying it to the dollar. Do you think you could just spend a little bit of time breaking down a little bit about, and we don't have to go too deep here, but just so people can understand what it actually means to have a cryptographic asset to move around 24/7 like Bitcoin? Can you share a little bit about what the makeup of the USDC is from that perspective, from a technology perspective, so they can understand a little bit why it's seamless for the assets to trade between Bitcoin and like USDC?
Sure. So USDC is built on, from a technical perspective, an ERC20 contract. So the base contract is built on Ethereum. It is fungible across numerous different blockchains, including Solana, Algorand, Stellar, and we're working on a few others. But basically, you would want a wallet that's capable of holding tokens that sit on those blockchains. It's blockchain specific. Generally speaking, if you're using an exchange-based wallet, the bigger exchanges will have those capabilities. We also offer wallets for free. And so if you go to, for example, circle.com, you download an account, we do two things for you. We offer you the ability to directly purchase USDC of any of those flavors through fiat. Again, there's no charge other than your traditional bank charges to send a wire to us. We also offer a wallet that will fungibly change between all the different types of USDC. We offer APIs for those different types of services as well. But effectively what you're doing is it's a bearer asset. So think of it as getting $10 out of the ATM and putting it in your wallet. You hold that, that is yours. The wallet that you hold has both private and public keys. The public key is what everybody else in the world uses to send you that value, including us when you purchase USDC. The private keys is what you hold to access that, which you are not to give to anyone else. It is a protection tool. But other than that, yeah, it's a digital wallet. It's very easy to use, and we offer a lot of education on our website for those that are looking to get a little bit sharper on how to use those wallets. And we're also pretty hands-on. So to the extent that folks want to give us a call and have us walk them through, we're happy to do that as well.
That's fantastic. And, you know, it's amazing to really start to think about how this technology is really transforming how we interact. You know, in the fact that I think from a trading use case, right? And I think that's probably the most prominent use case at this point in time. And we can dive into the other use cases for USDC and stablecoins. But I think effectively the trading use case is so simple, and it's so amazing to see the fact that you can actually settle real time instantaneously. You know, if you're going to exit your Bitcoin trade and you exit into USDC, just like Patrick said, you're able to have that USDC as a bearer asset, bearer instrument. So effectively you could take that and move it, and, you know, whatever, you could buy something with it at a store, you could move it to your own private wallet off an exchange. You can move it to, you know, there's even trading use cases where, you know, they're used from an arbitrage standpoint. We're able to move it from exchange to exchange. And it's able to happen instantaneously, which is stunning. And then I think, you know, right now you just mentioned that USDC exists on the Ethereum blockchain. So therefore you would have it inside of an ERC20, I think, token inside of a ERC20 wallet structure. And then you just mentioned that you're going to be expanding across some other blockchains as well.
Yes, absolutely. So you're right. I mean, probably 90-95% of USDC currently is on the Ethereum blockchain. The next largest is Solana, which is a blockchain we're super excited about. You know, we think of the efficacy of blockchains in terms of settlement times. And right now you can settle, for example, on Solana for about 1/10 of a penny at 400,000 transactions per second with settlement time of 300 milliseconds. And so in the world that I grew up in before I was at Circle, I grew up at Goldman Sachs, finance operations risk, around trading desks of all different sorts, both algo and OTC based trading. And so have a fairly decent understanding of the fact that speed really matters and settlement efficacy matters. So, you know, we're really excited about the advancement of other chains. You know, we haven't really taken the view that we need to pick a winner. We have the ability to build USDC on multiple different blockchains in the future, and as new technologies emerge that are superior, we look forward to partnering with those blockchains as well.
That's fantastic. Yeah, and as that trading use case exists, the fact that the reason that somebody would exit, their BTC position, and rather than going to dollars and waiting for dollars to settle, you go into USDC and you settle it instantaneously is just stunning. And the fact that, similar to like Bitcoin, you effectively can move value across the world instantaneously at a fraction of a cost. I think the other day I was dealing with a wire scenario for a large amount, and it was costing over $25, and I had to break it up into several wires because I was limited on the size that I could actually send. So if you could imagine, we're actually at a fragment of that cost structure that exists today in the banking system by utilizing this stable coin, which is just stunning to see.
That's exactly right. And, there's a number of different ways to do that. We're fortunate to work with great banking partners who have built tools that are really conducive to success in this space. And more banks are starting to see that this is going to be really important to the growth of their user base, both from a retail and an institutional perspective. We don't think we're replacing banks. We think we're a partner of the banks. We think we have a lot of value to provide them. We support the two-tiered banking system, and having something like, for example, and forgive me if folks aren't as familiar with these tools, but like Signature, they have a program called Signet. Silvergate has a program called Send, the Silvergate Electronic Network, that allows you to move dollar funds to another bank customer 24/7, 365, which aligns your fiat movement with your crypto movement. And so what that means is, as more and more banks decide to do this, you can literally suck up those dollars into USDC. You can move it across the globe to another bank that has that 24/7, 365 access and pull down into fiat if that's what you need it for. And so you're really getting around a lot of the traditional frictions that people have with the banking system, which tends to be a huge pain point with the trading community, particularly those that are operating in a lot of different venues. And so we've tried to tackle that complexity head on and look forward to continuing to improve.
That is just astounding. And I guess, maybe we can even step back a little bit and just maybe you could just share a little bit about the USDC story, actually, how Circle came about USDC, and then just kind of the model that you guys just decided to build, which we are talking about right now, but kind of give us the view from, I think, 30,000 feet, what the story looks like of USDC. And then maybe we could dive into where it's going and start going into some of those other use cases outside of trading.
Absolutely. So I got to Circle about 3 or 4 months before we launched USDC. And when I got there, it was just a white paper. There was nothing. I mean, they had sort of the sketch of the technology necessary to build the contract that USDC resides on. But ultimately, it was just an idea with a lot of optimism on what was both the need for sort of a regulated, transparent solution in the marketplace that in particular catered very well to institutional customers, as well as our ability to meet that bar. And I think our view was, we're going to build it because we think the market needs this, and we'll see where it goes. And then over time, we got a lot of really positive, constructive feedback to say, hey, whether it be people who are crypto native, crypto adjacent, or folks who aren't in crypto at all that see the value in it, can you do more things with this? And that sort of is sort of an organic segue into the use cases. And so now, we're talking to banks, financial services firms, S&P 100 corporates, public companies on very old, unsexy problems that we can solve with USDC. And so settlement is a good example. Global remittance is a great example. You think about all the complexity that a huge, multifaceted, multinational bank has with settlement. Same thing that traders have, moving value across the globe, and all the complexity, in particular cross currency, that goes with that. And then you have the same type of corporate treasury problems with large multinational companies. One of the most interesting use cases that's cropped up recently is, and we recently announced this, was MoneyGram, which is one of the largest global remittance companies in the world. Right now, global remittance on average costs 7% per transaction. And it's a multi-trillion-dollar industry. And so we partner with them to make that faster and cheaper for customers. It's a pretty competitive business. And so ultimately what MoneyGram's going to do is they're actually going to use Circle infrastructure to replace traditional fiat rails and move value globally over USDC in all of the traditional locations that MoneyGram supports. And so when we think about, what is the TAM for this? I mean, it's really everywhere people use money. And I think a reasonable question on back of that is, well, would there be interest in other fiat-backed stablecoins in the future? And I think I may have seen that question cropped up here in the screen, but the answer is absolutely yes. It's pretty non-trivial to build a fiat-backed stablecoin. not even necessarily because of the technological or operational infrastructure necessary to support it. It's a lot more about the regulatory footprint. And so Circle, among other things, if you want to know one thing about Circle, we've always been regulation first. We seek out the appropriate licenses, registrations, and legal support in order to build something and make sure that we have solid footing in those areas. And we continue to do that with an eye towards, yes, many other fiat-backed stablecoins in the near future.
Yeah, and I think that's an important distinction. I think maybe if you could dive into a little bit about some of the other stablecoins that exist and the structures that exist around them, and why I think that there are challenges around the way that these are constructed, and that some of the concerns maybe that regulators have with the type of constructs that have come about.
Yeah, I mean, it's probably the one most frequently noted is Tether. And look, I think everyone has an opinion on Tether. The one thing that's really important to note is they are critical to the crypto ecosystem. When you think about all the different, going back to the idea that stablecoins are listed against pairs like Bitcoin and Ethereum, they have a lion's share of that market. And so they're critical to the health of the crypto market. And that was what they strove for. They wanted market penetration globally quickly. And where they left off was a lot of the same focus on the regulatory footprint, the legal standing, the transparency that Circle focused on. Circle was notably much slower to grow. I mean, as a point of comparison, we used to be less than 10% of what Tether was. We're now more than half. And so what I think everyone's realizing is that even though you may not be as fast out of the gate and as aggressive with your growth arc, it's really important to pay attention to these things and bring regulators along with you, particularly with the size that stablecoins are now. So to your question of, what are regulators, what are market participants really focused on? It's, what is the long-term efficacy of this product? And now that stablecoins have grown to over $100 billion, well over $100 billion in circulation, understandably, those that spend a lot of time thinking about how to regulate banks are focused on this. The US government in particular is very focused on this. So recently there's been a presidential working group as part of Biden's office. He's gathered key leaders across several different organizations in the United States to talk about how stablecoins should be regulated. And I think Circle's in pole position to be successful along those roadmaps. So the key words, and we've announced a lot of this already, sort of preeminently said, hey, we're going to become a bank because we think that's the way the winds are blowing. But the presidential working group has come out with some ideas around the need to regulate these types of businesses in the same vein as large payments companies, as a clearinghouse in the payments network. And so it's going to be somewhere in there. And I think we feel great about where we're positioned today. In many ways, Circle operates exactly as would be ascribed with those models. And so hopefully that's a helpful answer.
Yeah, that's great to hear. And I think that it's always a concern. I think when any new technology comes about from a regulatory standpoint, how it impacts the markets, the market infrastructure, the resiliency of the market changes quickly based off of these new technologies. And so you can understand the concerns. And it's nice to hear that your guys' approach is open and transparent for people to see and understand, which is great. Because it allows for this technology to hopefully grow and be integrated into the actually financial market infrastructure. So let's do this. Let's talk a little bit about the market cap. What is the market cap? Like, can you just describe what is it actually comprised of?
Sure. So the market cap is representative of all tokens in circulation and the corresponding dollars that back those tokens in circulation. And so generally speaking, the market cap may deviate slightly because there's always going to be that small number of basis points that exists across the many numbers of exchanges that offer USDC as a listing pair. So those services will take that into account. But USDC is always redeemable for $1 at Circle, as with Coinbase, who's our partner in the Center Consortium, which is very quickly on that centers the governing body over the rules of the road for USDC and other fiat-backed stablecoins, much like Visa makes the rules for Visa cards, but doesn't actually issue the cards themselves. And so, yeah, I mean, right now, I can do a quick check, but we're over 33 billion as of this morning, which means there's 33 billion USDC moving around the globe, a variety of different flavors. And so, to my point earlier on the composition of USDC, so if we're at 33.14 billion today, Ethereum is 90.5% of that. The next largest would be Solana at 2.4 billion, and then Algorand, Hedera, and Stellar and Tron. So that is the aggregation. That's the composition of USDC in circulation. And again, we're growing by about $1 billion a week along those lines.
That's fantastic. And maybe you could actually dive a little bit more into the treasury function and how that works around USDC, what you're actually managing from a treasury function as far as like the dollars that are actually backing it.
Yeah, so from a treasury management perspective, I mean, you can imagine there's an extraordinary degree of complexity with the flows that we see on a daily basis. And so for net growing by about $1 billion a week, we're seeing a multiple of that every single day. So we've got inflows and outflows from a number of different institutional customers. And so ensuring that at all times, the fiat movement matches the digital asset movement, and particularly when you're getting into questions of cross digital asset movements. So when there's swaps, for example, between Hedera USDC and Ethereum USDC, treasury operations reconciles and manages all of those flows globally. And we now have a really significant number of banking partners. When we started out, it was just Silvergate, which made for a pretty simple model. And we quickly outgrew the ability to solely do banking with Silvergate. And so now we bank with the likes of Signature and US BAM as well, in addition to others. And so the rebalancing of those funds also sits within treasury operations. At any point in time, we have a lot of analytics around liquidity, and we focus on traditional bank-like things like LCR ratios. But we are constantly 24/7, 365 monitoring to ensure that we can redeem with customer demand at all times, irrespective of the hour of the day. And so when you are a global business and you have flows going internationally and you have multiple different banks, you need to have a pretty strong team, and I'm pretty proud of the team we have today.
Fantastic. That's awesome. And, I think part of understanding that construct is really important for people to feel comfortable about, when they put their dollar in, where is it really going? And then are they going to be able to get it back? Right. Because there's always that concern. I remember when I first started in crypto, I was always like, oh my gosh, once I get the Bitcoin, how am I going to get my dollars back? It was always that first concern until you start to realize what you're actually getting involved with. And you're actually saying, well, how can I get more Bitcoin? But on the other side of that, I did the same thing with USDC. When I first started with USDC, I was trying to figure out, like, am I going to get my money back? Because you're hearing all these horror stories about people in different areas of the space that are getting hacked and so on and so forth. And then you realize that it's not necessarily the actual asset itself that you're concerned about, but maybe how you're interacting with it and how you're moving the coins around that can be concerning. I know for me personally, when trading or even when operating, I would much rather operate in a USDC world rather than in the banking world as we know it today. I'd much rather operate holding USDC personally. But I think effectively, it's always a concern for people when they're trying to understand what this is, what they're actually buying, and then what does it mean holding it? Is it ever going to lose its value? Am I ever going to, what is it really tied to from a value perspective? So those are just really important aspects for people to understand so that when they do want to transition into the crypto world, that they can feel comfortable. Like at TradeStation, we offer USDC. We offer you to trade with USDC. And it's a much easier way to operate inside the crypto space as people start to get to learn and know about it.
Absolutely. Yeah, those are all really great points, Anthony. And I think to your first point on where does it go? So every dollar that comes in or other currency that gets converted to a dollar that comes in goes to one of our two settlement banks, which is Signature and Silvergate. Beyond that, we rebalance funds on cadences and at ratios that make sense for how we're seeing the business operate and the needs of our customers to a number of different reserve banks. So the dollars are always sitting somewhere. And we, to that end, publish monthly attestation reports from Grant Thornton. We have since the first month that we launched this product that definitively prove that we have as much or more dollars backing USDC as USDC in circulation. So 3 years worth of monthly attestations, I think, has garnered a lot of trust in the market for us. And we continue to look at doing more over time, but that's been sort of the tried and true way that we say, yes, these are where all of the dollars are. And, in terms of more broadly, like worrying about sending your crypto funds somewhere, and I think this is a really great point that you're making, and losing them, that has no bearing on the dollar-backed nature. And to be really clear, the reserves backing USDC are dollars and treasury bills. That's it. Those are the only things. So short-term treasuries, 9 days in, and cash sitting with our banking partners. And we attest to that fact. But to your point of like, once those dollars are in and then I'm using USDC, and I think we touched on this earlier, it's really important to understand how you are executing a transaction. And so to the point of, okay, if I've got, Solana USDC, which is really popular among institutional traders in crypto, and I'm sending it to a wallet that does not support Solana USDC, that's a big risk, right? Because you may not be able to get those funds back. So wallet capabilities are really important to understand. And to your point, Anthony, TradeStation offers those things, and that's a really key element of attracting people who want to transact in crypto. But equally important is, helping people to understand how to safely transact, and making sure what the risks are. And there's a lot of important stuff there.
Yeah, 100%. And I think that's what we're trying to do today, is just educate our audience on where the risks lie, how to interact with these tools, what USDC really means to the market and means to you as a trader or just an investor, and how to utilize it in a safe manner. So yeah, I think as we talk more about the risks of this, can you maybe actually dive a little bit into why you created Solana USDC, and other blockchains that you're looking at as well? Just because I think when you start to look at the risks, right, the risks start to get, I think, diversified across a blockchain at that point, right? So right now, you guys are sitting on Ethereum blockchain. So we are actually identified that Ethereum is likely to be around for the next decade or more. So we're saying that there's a good probability that this is a good place to actually build on top of. And that's kind of, I think, the approach you guys took, is what it sounds like. Now, what are your thoughts on what the risks as far as going out to different blockchains and then using those USDCs on those blockchains? What's the, I guess, along with the risks, what are the reasons that somebody would use a USDC in a Solana, ecosystem versus USDC in an Ethereum ecosystem? And maybe that kind of touches upon the different ecosystems that exist.
Yeah, absolutely. So there's a lot of different points in there that are worth covering. Number one, yes, we selected Ethereum first because of its prevalence in the market, the ease with which you could build business applications on top of Ethereum, and largely a demand from many network and ecosystem participants to have that version of USDC. And so one of the things we try to do a really good job of is listen to our customers, and that's in many ways how we ended up with USDC on Ethereum. And same can be said of Solana. I think, a fair way to think of, albeit an oversimplified way of thinking of different blockchains, is as operating systems. Mac OS versus Android, for example, and they're going to have their pros and their cons. And we have a very deep, comprehensive framework that we use to evaluate new blockchains for building USDC on it. And so, you're going to think about the standard things that most people think about: uptime, security, operational efficacy, transactional efficacy. And so, I was speaking about how a lot of traders really like Solana USDC, and that's because of how fast it is and how cheap it is. It's right now, just to give a point of comparison, the Visa network transacts at about 75 to 85,000 transactions per second. And right now, Solana is roughly 4 times that and growing. And so the capacity to process numbers of transactions per second is really helpful, again, for the large institutional money coming into the ecosystem. And that's how we've grown from 0 to 2 billion. And really, basically only a few months, and we expect that to continue to grow. I don't think Ethereum will ever lose its place, but I think there will be others that rise to the occasion and offer something that's really compelling. And we'll continue to evaluate new blockchains in the same way. It is a rigorous process to go through with us to determine whether or not we can build USDC on it, because at the end of the day, if the blockchain goes down, similar to an operating system go down, that's still our brand, that's our trust. And that's something that we're really focused on.
That's fantastic. And that's great information to really understand really how you guys have thought about this. And yeah, I think that these are the new operating systems of the future in our financial system, in the financial stack, and how we're going to operate. And then, I think that we're starting to see the different reasons for people using these different ecosystems. And I think that maybe we could dive a little bit into each of these. Are there like different use cases inside of each of these ecosystems of the reason that somebody would use Solana versus Ethereum, and USDC on Solana versus Ethereum? Because from our perspective, when you step up into just the trading aspect of it, USDC and settling into USDC out of Bitcoin or other cryptos makes sense. But are there other things that are happening in these ecosystems that they're using these stable coins for?
So yeah, I mean, I would say the primary demand for different types of USDC relates to what is offered on different trading venues. And let's use exchanges as the primary example. Um, Technical point, but an important point, as new versions of USDC crop up, we have to work with global markets participants, both exchanges and market makers, to list those pairs and also to provide liquidity for those pairs, right? And so if, for example, you have Ethereum USDC on an exchange and it's listed versus Bitcoin, you would have a separate pair for example, for Solana USDC or Algorand USDC or Stellar USDC versus Bitcoin on that same exchange. And the reasons why people would want those different things, again, generally speaking, are transactional efficacy right now. And so the speed and the cost associated with transactions is really the second most important driver, but far less so than, hey, if I go to Coinbase, can I trade with Solana USDC, et cetera, et cetera. And we're making a lot of headway there, but it does take time.
Yeah, that makes a lot of sense. And then I think on top of that, each of these ecosystems is building different applications. Are there actually applications that are using the stablecoin as well as part of the function of that application?
Absolutely. And I think one of the most interesting use cases right now is DeFi, or decentralized finance. So you have basically software protocols, no human beings, that effectively operate as credit capital markets, where you deliver your version of USDC as collateral and you can borrow another form of token, or you can simply lend through the protocol and achieve a rate of what has been 3, 4, 5, 6, 7% per annum. And it's instantaneous. And so thinking of it as almost like an overnight repo type of product where I can park my capital, I can get 5%. If I want it 15 minutes later, 15 days later, it doesn't really matter. And you get paid instantly upon withdrawing your funds. And so right now, USDC is the prevalent form of capital utilized within those protocols. And it's because, to your point, Anthony, folks have built these applications on top of blockchains that incorporate USDC. And so think of it as a network, right? It's more of a network. We have lots of different business applications, and USDC is a tool that people can use to transact within those ecosystems, generally speaking, to turn a profit. I think outside of capital markets, there are a lot of interesting use cases as well. And we're kind of seeing that. I use MoneyGram as an example. There are other examples in the payment space for right now. So for example, we offer to both crypto and non-crypto businesses alike the ability to transact across most conceivable fiat rails, credit, debit, wires, ACH, et cetera, bank transfer, and settle in USDC. Swipe a card, do a transaction, have that settle in USDC, which has proved to be really successful also.
Yeah, it's amazing to see these different payment use cases. Along with that, you had mentioned as part of these ecosystems, as far as what we call DeFi, decentralized finance, that's coming about. It is just wild to see what's being built right now, and a lot of it's early days. Now, I had a conversation yesterday with Ash Bennington, and we were chatting about, it's kind of like, investing in venture early stage, and considering the fact that you have a token that has a mechanism of value that's associated with it, is something extraordinarily different that people are starting to understand and realize of what this space is really all about, and how that the ground floor users can actually access these new innovations and changes to the financial structure and be able to benefit from them. And it sounds like from what you were just telling us is that USDC acts as that base layer currency inside of this decentralized finance ecosystem, that you're able to come in and out of these different projects and back into USDC, and that all happens instantaneously. So you actually have that stable value where you can park your capital while you're participating in these different networks.
Yeah, that's exactly right. And I would point to the size. I mean, there's real capital going to this. I think DeFi clipped 100 billion. It's well north of that now, but mid this year. And so there's real both retail and institutional market interest in pursuing these types of protocols for a variety of different reasons. So it's super exciting to see. And we think that innovation will continue within the capital market space and also in the traditional use case for fiat money.
So, as we're talking about these ecosystems and why it sounds like they're becoming very important, which I'm very excited about, because you're starting to see new business, I think, constructs come about from them. Could you talk a little bit about some of the concerns around how the regulation is looking at it, in a sense that, are there things that could happen that could really reduce the innovation that's taking place? And what kind of risks, I guess, regulatory risks are we seeing right now that we should probably just pay attention to, and that we as supporters of this market can have a view of how to look at this so we can maybe help educate our regulators on what this is, how it works, and how we can become, I think effectively safe, create a safe ecosystem for people to participate in.
Yeah, and that's a really great question, and something that's along a lot of people's minds right now. Let me start with USDC and how it's regulated today. So USDC is regulated as stored money. So Circle, for example, has money transmitter license in the 46 states that require one in the United States. And so think of it as like a banking light form of license, where digital assets like USDC are explicitly regulated as stored value. And so there's not really a lot of confusion there around how a stablecoin such as a dollar-backed stablecoin, i.e. USDC, is regulated. But more broadly, there are concerns around what may or may not be considered a security. I think that's really the hot button question in most circles today. And I think a lot of tokens out there that have a promise of a return as one of many types of metrics utilized to determine whether or not something that is a security will be deemed as such without the proper registrations and licenses to do so. And so, a really obvious example that's been in the news a lot is Ripple, and they have ongoing conversations and such with the SEC. We think that'll continue to happen over time. It's really sort of unclear unless specified otherwise whether or not something will be deemed a security. And right now, the SEC is spending a lot of time on this space, crypto more broadly, but we'll wait and see. I think the other big question is, how should we regulate stablecoin issuers? And I provided a little bit of color on that before, but I think generally you're going to see something in the payments clearinghouse banking space, and I think it's going to be bespoke. They're spending a lot of time on this space right now, which is great and something we've asked for a long time, and we'll meet it head on. But I think Circle in particular is well positioned to capture that. It is going to be a regulated environment, and it's going to happen sooner than later. So we'll see how things shake out. On the SEC side, though, hard to tell. I mean, it's anyone's best guess.
Yeah, it's definitely, I think, a challenging time for the market as a whole when it comes to getting clarity. I think, and I think that's part of like what you're seeing as well happen around the globe. There's I think game theory is playing out. You get some regulatory arbitrage taking place. There's real concern about the U.S. kind of putting themselves in a position to push the market out of the U.S., which we don't want to happen. But I think we're hopeful, and I'm personally hopeful that the market does get a fair chance of identifying what it is, and really trying to bring clarity for people. I mean, it's obvious reasons why people around the globe are operating in an extraordinarily new environment. And I think the safe and security aspect of keeping investors and people safe is important. But also too, we want to be cautious. And I think this is what kind of the message is that I hear a lot. I'm definitely not an expert in this, but I think it's more or less, we also don't want to exclude people, right, from this. And I think that's kind of the nature of the crypto markets globally, is that it's inclusive, right? We have over 2 billion people that are unbanked around the world. Cryptos like USDC are providing a platform for them to participate in the financial markets, Bitcoin as well. So I think effectively the concern is that the regulation would push the average person that doesn't have access to this style of investing in the traditional markets due to the nature of the way that it's regulated.
I think that's exactly right. And I think it's a great way to look at it.
So let's talk a little bit more about, I think, just understanding a few more of the use cases around USDC. You mentioned some banking use cases and payment use cases. Is there anything else, or is there more details around that we could learn about and understand?
Yeah, I mean, I think thematically, anywhere where it's difficult, costly, expensive, complicated to use money is where USDC can be effective. And so conversations with banks, financial services firms, large corporates that have really complicated treasury operations matters that they have to solve for are finding USDC really, really helpful. I think there's an adoption curve because it's, to your point, Anthony, it's different. People are still learning about this and understanding how it can impact their businesses, but I think we're seeing some strong early returns on interest and understanding and acceptance of this space. And, I've mentioned it a few times, but I think the MoneyGram scenario is a great example of that. And the reality is, with the advent of the internet, it made information sharing a lot easier, and that transformed almost everything we know about our lives today. But money never really changed. Money in general, whether you think about banks or PSPs, card networks, it's one of the most intermediated spaces in the world, and USDC has the ability to disintermediate that space several fold. So that's what's so exciting about what we're doing today, and we're focusing on all those use cases. And you're seeing a lot of adoption through partnership. I think a good example of that is Visa. So today, Visa network actually supports USDC as a settlement tool, which is really impactful. I mean, one of the largest and most powerful and well-known networks in the world, money networks, I said, yeah, this is actually a pretty interesting way to exchange value. And we can do it in a way that's scalable globally. So yeah, payments, global remittance, settlement are really the three big things that we're focused on today, and excited to see more traction there as time goes by.
That's excellent. And can you go into a little bit more about the Visa use case? That sounds so fascinating that Visa is using USDC to settle. Can you explain a little bit of the inner workings to our audience about how that actually happens and how, what the actual mechanics of that look like?
Yeah, absolutely. So, and this is all public information. Circle struck up a partnership with Visa several months ago, maybe a little bit more than a year ago, and across a number of different areas, but not least of which was, how do we innovate around this great technology that can really change the way people use money? It's cheaper, it's faster, it's just as safe, if not safer, than moving value across any traditional fiat network. And so what they did was they actually did the hard work to actually build the native capabilities to transact with USDC across VisaNet, the proprietary network that Visa operates today that holds all of their credit card transactions globally. And so all of these things take time. And so, you have people today that can swipe a credit card transaction and settle USDC. That's something that we can do. You'll see more and more people be able to draw from a resource, such as a wallet that holds USDC, to pay a credit card transaction or a debit card transaction, or send a traditional bank transfer. I use the colloquial term bank transfer, but send money to somewhere else around the globe. And that's one of the really big catalysts to that end. I think it's really important for people to see that this is mainstream. And I think those types of announcements and partnerships are helpful to that end. And now we are working really, really hard on just easier ways for people to use it. The easier it is for people to use this technology, the more adoption we're going to see. And as simple as that may sound, it's pretty non-trivial, but something that Circle is highly focused on.
Yeah, I think the UX has definitely come a long way, I would say, over the past decade, from where Bitcoin started from and to where the crypto markets are today. But I think we still got a long ways to go. I think it's still pretty challenging to operate in this space when it comes to actually holding your own cryptos in your wallets, even USDC. You still function with a bit of concern, about, am I doing the right thing? Am I protecting my assets properly? All these kind of questions and concerns that still exist, but definitely making it much easier with these use cases that you're talking about. One thing I wanted to ask, though, was a little bit more about the inner workings of that Visa use case. Is there actually cash still moving around in these settlement use cases, or is it just USDC?
Yeah, I mean, that's a really interesting question, right? So it's literally USDC crossing VisaNet. And so the way that would work, practically speaking, is you would have sender, person A, on the one side, exchanging their fiat money for USDC, then sending a transaction across VisaNet, received on the other side, also recorded on VisaNet. And then whether or not they choose the USDC, that's their choice. But in theory, they could off-ramp their USDC into fiat at their local bank. And that's, one of the probably least interesting but most important things that Circle's working on, is a global settlement framework that allows people to move in and out of USDC really quickly and for low cost. One of the things that I spend a lot of my time on is I want to make sure that folks' fiat experience, and to be clear, this is not the case today and something we continue to try and make better and better and better, but make sure that they get that USDC really quickly and make sure it doesn't cost a lot of money. But you're relying on traditional fiat networks in order to do that. And so we're working on expanding our settlement capabilities globally in order to afford that type of experience to our users.
Yeah, that's stunning to hear. Because I come from obviously, coming from State Street, coming from a big bank world as well. Effectively, I think the biggest challenge in everything we do, it happens to end up being on how does the cash settle? How does the cash move? Where's final settlement taking place? How long does that take? With all the security transactions, you deal with that. The cash leg is always what takes the longest, and is the risk component of the actual transaction itself. So, I think that it's very fascinating to see USDC start to integrate on that settlement layer, which is just stunning. And I think the Visa example is excellent, especially with the fact that, when you're talking about going to your remittance example, people spending 7% to actually send money across the world to their families. And a lot of these use cases, where people come to the Western world and they, are able to make a career and they want to send money back to a third world family member, and they're spending, 7% of their earnings just to be able to send that is just astounding. And it's just unbelievable about what something like USDC or other cryptos can do in this space to actually bring that down to a fraction of a cost and people are able to keep the value of what they're, creating.
That's exactly the idea. And so, I think this is something we work at every single day, and trying to penetrate different parts of the financial and banking ecosystem to make sure that people have more things they can do with USDC. There's a high degree of correlation between the sticky element of USDC and circulation. And so this arc of growth that we were talking about, where now we're at 33 plus billion, we started the year at roughly 4 billion. So, we're looking at almost a 10x for this year. But that's because the USDC stays in there and it's used. And so the more things that we can give people to use USDC, the more USDC is going to grow. And if you're seeing that, you're sort of seeing that become the truth.
Yeah, I'm really excited about that. And I give that example of the securities trades that take place. A lot of our traders here trade equity markets. And I think some people just don't even realize, until you work in the financial system and you start to see these things take place from an operations perspective, I don't think people actually even realize that the cash leg settlement process, how that all works, the drag, the capital, the risk, that teams of people that have to operate this process, which is extraordinarily expensive. I think it was Accenture research that had put out in 2020 or maybe even 2019 called the 2022 Outlook, and it had actually broke down the asset management costs, and it happened to do all around the operations of just the way assets are moved around the world and how they're traded and how they're settled and whatnot. 92% of the actual costs came from that operational activity that takes place, and a lot of it has to do around the actual movement of cash as well, which is just stunning to see.
Amazing. Yeah, I think that's exactly right. And look, this is what gets me up out of bed every single morning to work on this type of project and growth and the incredible opportunity set. So I'm sensitive to the fact that we may be out of time, but it's really been a pleasure to talk about this today. And I don't know if we have time for questions.
I think we have 15 more minutes.
Okay.
So I'm checking the chat right now. I don't see any questions. Okay, I got a question right here. Will there be a USDC LIBOR market model for cryptocurrencies that will be developed and manipulated by nefarious players?
I don't know if I'd analogize it to a LIBOR market being manipulated by nefarious players, but I think, were there to be an FX market or an overnight market for USDC borrowing, I think it would need to have the traditional types of market components. And so you have people who make those markets, you have a regulated aspect of that market, and you have liquidity in those markets. I don't think we're close to that today, but I think the idea is really, really interesting, and I think something we'd hope to tackle in the future.
Yeah, I agree 100%. And I think, when you talk about, I think the LIBOR scandals that took place in the mid 2000s, effectively there was definitely some, I think, nefarious players there that existed. But having been part of the banking system and working inside of a large bank for the past 10 years, the regulation that has come down on banks has pretty much strangled them not to be able to do anything, which I would consider that we learn from these things. And I think that's where we're able to take this into a new technology like USDC and learn from how to improve transparency. And along with that, let me just ask, what are some, maybe you could dive into a little bit more about what transparency exists when you have USDC?
As in, what are the elements of transparency that we offer people?
Yeah, exactly. Is there ever opportunity to, I know on Bitcoin you can poke into the blockchain. Is there ever opportunity? Are you guys thinking about going to that direction to give people visibility into this from a transactional perspective? How does that work? Like, what are your thoughts on that?
So right now, the primary form of transparency that we offer are those attestation reports that we publish monthly. Those are on our website. You can go to circle.com and you can get that every single month. It's Grant Thornton's report, and it attests to the fact that, again, there's as much or more dollars in reserve as there are coin in circulation. Beyond that, yeah, I mean, I think we're always trying to think about innovation in the transparency space, and a lot of folks have asked questions about, hey, can you do something real time or something daily? What I say is that we're chewing on it. We're trying to find ways to get better in every aspect of what we do, including transparency. And we'd love to roll something out as soon as that's operationally possible.
That's great. I think there was another question here. What does it say? What are the security papers backing Circle USDC? I think what they're asking is what's backing. I think we talked about that. That's cash and US Treasuries.
Yep, cash and T-bills. That's it. So 90 days and then T-bills and cash. Those are literally the only two things that back USDC today. And all of that again is included in our monthly attestation reports.
Excellent. I have another question, actually. You had mentioned a little bit earlier, right now, USDC is backed by dollars and backed by, like we just said, Treasury. So I think effectively, is there a thought process, and I think may have mentioned this, about going to other currencies? And are you able to disclose anything that, what currencies you're looking at?
So as much as I'd like to, we're kind of walking that fine line right now, sort of on the verge of becoming a public company of not disclosing too much. But I would say, it's something we're committed to. It's something we're very focused on. I couldn't say what currency is going to be next. But we spend a lot of time thinking about and working on other fiat-backed stable coins, and we're excited to roll some of those out in the semi-near future.
Okay, great. I think another important point here for people to maybe learn and understand, at TradeStation, you can come to TradeStation and actually, if you deposit, fiat into your account, you're actually able to buy USDC and hold USDC. You can actually transfer USDC out of your TradeStation account, out of your TradeStation wallet into your own wallet. I guess, Patrick, could you just take us down a little bit of path of where else people can access USDC and how they can interact and what steps they take in order to actually obtain some USDC themselves?
Sure. I mean, as much as this will sound like a plug, because it kind of is, you can get it from us directly. For institutional market participants we have who do a high velocity of trading and therefore need a lot of USDC, our API tools are extremely helpful. We work with all the biggest players in the space in the institutional trading community who transact in crypto. And if you just want like a free account, we only work with businesses today. That's an important distinction. We don't work with it. We're not a retail-based company, so we don't have the ability to do that. But to the extent you have, for example, an LLC or otherwise a part of a larger business, you just want a free account and you want to transact manually, meaning you send a wire to us and you get USDC to your wallet, totally free. You just sign up on our website. We can turn around within generally 24 hours. More broadly, yeah, you can absolutely go to any exchanges that list USDC and or otherwise platforms that list USDC. TradeStation is awesome. That's a great place to get USDC as well. And we generally are working with folks like TradeStation and others to be able to source their working capital for USDC. But any way you get it, I mean, I think TradeStation is great. USDC at Circle is great. Coinbase also offers this on their platform. Generally, any platform that offers traditional fiat rails is usually where you can get USDC. Otherwise, you've got to have crypto first, and I'm guessing that's probably not a large percentage of this particular audience.
Yeah, and I know at TradeStation, in order to open an account, you go through our AML KYC process, which you're fully vetted ahead of time. And I think that you guys also offer an AML KYC type of process as well for users that are going to go on to the USDC rails.
Yep, that's exactly right. So you can think of our onboarding process as very similar to a bank. And so we're going to ask you for a pretty reasonable amount of information about yourself. We're going to go through all the normal checks, but absolutely as a function of aspiring to be a bank and being a light form of a bank today through our MTL licenses, we are not only required, but we are. It's important to us in terms of the pivotal role that we play in the ecosystem today. It's important for us to know exactly who we're getting dollars from and exactly who we send dollars to on the back end when people redeem USDC.
Fantastic. So we got another question in here. It sounds like somebody wanted to understand a little bit more about the value of stable coins such as Circle and USDC. We were going through those use cases here during this time, but maybe you can just maybe highlight those use cases and value one more time, Patrick.
Yeah, absolutely. So in the trading sense, it's the ability to transact instantly. By instantly, if we want to be literal about it, seconds, perhaps minutes to transact between different addresses or to spin up USDC if you have a fiat related deposit, and almost for no cost. I mean, Ethereum can certainly be expensive at times. So the cost to do a transaction on Ethereum is called gas. That's just what the Ethereum network charges to do a transaction. It's not a fee that Circle charges. But outside of that, I mean, it's relatively instant and for basically no cost. So that's really important. But then more broadly, the ability to transact in high volumes, high velocity trading with that degree of settlement efficacy has been super, super important. And then the idea that you can do so 24/7, 365 is super important. So that's sort of the trading use case that's been really prevalent and a big part of the growth story for USDC today. But then more broadly, absolutely anything that relates to settlement. So payments, global remittance, operational settlement within the context of large banks. So if a bank is doing a lot with, for example, collateral, and they have complex collateral movements to have across the bank, which is more or less just widgets moving across the bank's platform, but it's actual dollars that have to transact, USDC is a great tool for that as well.
Yeah, that's fantastic. You kind of brought up an interesting point, and I think it's important for people to understand. Yeah, this is not a USDC fee when you're actually transferring USDC between wallets. What you're dealing with is actually network fee. So depending on what network you're operating on, like we mentioned, I think Solana, is it Cardano as well?
We don't do Cardano.
No, you don't. Okay.
But we do Algorand, we do Tron, we do Stellar, we do Hedera Hashgraph, we do Solana.
Right. And then Ethereum. So I think that, yeah, it's important for people to note that each of and this is kind of where game theory kind of plays out, right? Like who's going to, who's going to be the dominant player here when it comes from like an operating, as you mentioned, as an operating system viewpoint of how to look at this. It's who's the dominant player. And I think that's what the competition is, right? It's about, how they can drive transaction fees of a crypto like USDC down to zero, right? At zero cost.
It is. It has been a race to zero. And I think, when we talk about the disintermediation of sort of the transacting market, so payments, banking in general, basically anywhere where there are heavy fees and a high degree of latency and actually moving money, we think that there's going to be a race to zero over time. Ultimately, crypto will aid and abet a drive towards fee compression and latency everywhere.
That's exactly right. And I think that's the purpose of trying to create this open framework for people to be able to participate in. One more question here I think I see as they're asking, this is Seth, he's asking, why don't you use Cardano? I think you kind of laid out, you guys follow a framework. Maybe you could share a little more in detail about that.
Yeah, so the framework takes into account every aspect of a blockchain. And so, what is their uptime? What is the degree of operational support to deal with issues? What does their technology look like? What does their security look like? Things of that nature. And it generally takes several weeks to go through that comprehensive review. We look at all blockchains. And so I wouldn't be able to offer any guidance on like who's going to be the next blockchain, although, there is information out there already today about other blockchains that we're considering. Is and or will be Cardano in the next time. I'm sure I couldn't speak specifically to that blockchain right this moment, but we do consider everyone.
Fantastic. I got another question before we finish up here. We got a few more minutes left, 3 minutes. Can you share a little bit about Center and how Center plays a role?
Absolutely. So Center is the rules making body. They make the rules of the road as it relates to USDC and what USDC is. I mean, in effect, USDC is a standard, right? The technology, the backing, the operational support, the experience that customers have, there's a standard associated with that. And Center is meant to maintain that standard. And right now, Coinbase and Circle are issuers of USDC. Ostensibly, there will be others over time, and it's part of its job is to ensure that as they court new issuers, large global businesses that will help to aid and abet the growth of USDC and other fiat-backed stablecoins, that those individuals, businesses follow the same rules that everybody else follows. So that's very much like and what I would say is a loose analogy, but like directionally helpful, is the same way Visa operates. Visa operates relative to stable coins, but they don't actually issue the Visa cards themselves, if that makes sense.
Yeah, 100%. And that's very helpful. So we can think of it as a governing body that develops rules around the actual way USDC operates.
That's exactly right.
That's fantastic. Let me see if there's any more questions. I don't see any more questions here, but Patrick, this has been incredible. Thank you so much for all the insight today. It's been really great to have you on. We'd love to have you back sometime to talk more about the developments as they grow at USDC and Circle. It's exciting to see the way that you guys have grown and the direction you guys are going. So why don't you share some with the audience about where they can find more about you, Circle, and USDC?
Absolutely. I would say, well, first of all, thank you for the opportunity. It's always great to talk to you, and really appreciate the chance to talk about what we're doing and what we're excited about. In terms of learning more, I mean, absolutely, sort of the normal stuff. We have a lot of great information on our website, circle.com. Any information that institutional folks want to know about our APIs, all of our docs are there, easy to get into a sandbox and start to play around with stuff. And yeah, you can follow Jeremy Allaire on Twitter. He talks a lot about emerging trends. Jeremy Allaire is our CEO. He talks about emerging trends in the crypto space, opines a lot of what's happening in the regulatory environment. So to the extent people want to just know, hey, what's being done or being talked about that's impactful to crypto and specifically stable coins, that's a great place to go as well.
Awesome. Thank you very much, Patrick.
Thanks, guys. Really appreciate it. Thank you so much.
Yes, thank you to you both. That was a great session. It's always fun to learn about all the new things going on in crypto. I myself am still a crypto novice, so I really appreciate all the insight.
Absolutely. Thanks again, guys.
Thank you.
Thank you.